Hopefully by the end of this video, you will feel amazing about your XRP investment. You will stop feeling fearful and scared, and you won't fall for all the FUD and all the scare tactics that people are trying to use to get your XRP from you and steal your financial freedom that is coming imminently. This is not financial advice. Do your own research. So if you look at the XRP chart, you can see that XRP is cooling off. There's a bit of a sell-off in the last couple of days. We know why this is. This is general across the board, affecting all cryptocurrencies. It's because the FOMC meeting is happening tomorrow, and people are anticipating what the Fed chairman is going to say. I think people are expecting that there's going to be rate hikes, and subsequently in September, another rate hike. And when rates are hiked, people are fearful. And of course, speculators and investors de-risk and get off of risk-on assets, and Bitcoin and cryptocurrencies are perceived to be high-risk investments, so they're the first to go. So this is what you're seeing. The institutional investors are selling off. Some people are taking profits from these relatively good levels compared to, months ago. And this is why we're seeing it cooling off. But this is not only happening in XRP, this is happening across the board. Now, if I zoom out a little bit, you can see that actually XRP, amongst all that, has still kept a lot of its gain that it got following winning the case against the SEC. There's still some FUD about appealing, etc. But most XRP holders that are long-term holders, they're not perturbed by any of that sort of stuff. You can see they're still holding very strong. And if you compare that with other cryptos, first of all, there is no giant pump, and a lot of them have responded a lot more negatively. Now, a lot of people are going to tell you that because of these pumps that we've seen in XRP, that XRP has decoupled from Bitcoin. Well, not really. This giant pump that we saw here, even though it wasn't as high as some people expected, was a result of XRP declared non-security, right? So that winning of the low case, or at least a perceived winning, has pumped XRP. And XRP has basically just gone back to being coupled with Bitcoin. Now, I'll zoom the graph to the left in a minute so we can see some other things. But see all these pumps here, they're just based on speculation, what people think. A lot of it is to do with external factors, off-chain analyses. For instance, right, you see the news here, I think right about here, was when the Hinman emails were released. So there was a little bit of a pump there. And then, of course, this pump here was because of the aforementioned winning of the lawsuit. And then following that, we had the Fed now release, which pumped it a little bit again. And now we have the FOMC rumors and fears, and it's basically just trending down. Now, it's still keeping nearly 50% of the pump. And some people have basically de-risked, taken profit, and weighed their positives and negatives. Some people speculate that the price might plummet down to the 50s, at which point they're going to buy back in. Now, if you don't believe that XRP is still well coupled with Bitcoin, just like every other cryptocurrency at the moment, look at this graph. This is compared to BTC. BTC is in the red and XRP is in the blue. As you can see, XRP pretty much just follows along with Bitcoin. During the winning of the lawsuit, when XRP went up to 80 something cents, 90 something cents, let me just zoom that in a little bit, you can see that it actually pumped Bitcoin. So very briefly, because of the extremely positive news, XRP briefly played the role of Bitcoin and pumped everybody else. Apart from that, when Bitcoin went up, XRP responded a little bit. When Bitcoin dumped, XRP dumped. It's just the way the cryptocurrency market is at the moment. Now, the fact that XRP pumped everybody else at that point is kind of indication and a tiny glimpse of what's to come, because I do believe that in the not so distant future, XRP might take the place of Bitcoin in market cap and the token that pumps everybody else. So Bitcoin might become coupled in with XRP and the roles might reverse. I look forward to such a time, and I believe it's coming. So a lot of those lines that you see that people draw on technical analysis videos, they might as well draw them on just Bitcoin, and most other cryptocurrencies pretty much do the same for now. Now, you often hear me say, not financial advice, do your own research. A lot of people have asked me, but how do I actually do my own research? All I have is price and charts and other people's YouTube videos. What is it that I can actually do to do my own research on cryptocurrencies like XRP? Well, actually, there's a lot of information out there apart from charts and prices that you can research. You can read the white paper for a start, and that gives you a thorough understanding of the cryptocurrency, how it works, what it's doing, what are the plans. A lot of these cryptocurrencies will have a calendar with landmarks and targets. You can study if historically they've hit those targets. You can look at the website. You can look at the team. If there's a company behind it, like Ripple Labs, for instance, you can study the careers of the people who are behind it. Have they been involved in other things before? These are some of the things that if people had studied with Do Kwon and SBF, perhaps might not have been completely tangled in the Luna and FTX debacles. You can also study the fundamentals of the cryptocurrency. If you're new to this or you need more information, Binance has actually produced an incredible resource of how to do cryptocurrency fundamental analyses. Now, a lot of people depend on analyses techniques from legacy systems. People have come from FX, commodities trading, stock markets. Some of these don't apply directly to cryptocurrencies because we have issues of decentralization and volatility that are not seen usually in the traditional markets. Now, this guide here is actually quite good. I came across this a few months ago, which is why I'm sharing it with you now because I think it's quite poignant. A guide to cryptocurrency fundamental analyses. The gist of this is this: crypto fundamental analysis involves taking a deep dive into the available information about a financial asset. For instance, you might look at its use case, the number of people using it, or the team behind the project. The goal is to reach a conclusion on whether the asset is overvalued or undervalued. At that stage, you can use your insights to inform your trading positions. So that's crucial. Now, if a cryptocurrency is overvalued and the fundamentals are garbage, that's a sign of impending disaster. You're going to get a Terra Luna situation, a UST situation. But if the fundamentals are amazing, but the currency is undervalued, like a certain X token that I'm a big fan of, then that is an amazing opportunity at life-changing wealth. Trading assets as volatile as cryptocurrencies requires some skill. Selecting a strategy, understanding the vast world of trading, and the mastering of technical and fundamental analyses are practices that come with a learning curve. You can take a course in this. There are a lot of free courses online. A lot of people advertise courses on YouTube. I've never taken any of those courses, so I can't really say whether or not they're good, but I know that they're out there. When it comes to technical analyses, some expertise can be inherited from the legacy financial markets. Many crypto traders use some technical indicators seen in Forex, stock, and commodities trading, like I said before, Tools like RSI, MACD, and Bollinger Bands seek to predict market behavior irrespective of the assets being traded. As such, these technical analysis tools are also extremely popular in the cryptocurrency space, especially the RSI metric. A lot of people use that. I see that a lot with technical analyses. It seems to be, working, especially for BTC. In cryptocurrency fundamental analyses, though the approach is similar to that used in legacy markets, you can't really use tried and tested tools to assess crypto assets. To conduct proper FA in cryptocurrencies, we need to understand where they derive value from. That's the difference. And then it goes on to say we're going to identify metrics in which you use a craft. Okay. So fundamental analysis is an approach used by investors to establish the intrinsic value of an asset or business by looking at the number of internal and external factors. Their main goal is to determine whether said asset or business is overvalued or undervalued, like stated already above. They can then leverage that information to strategically enter or exit positions. So it's actually relatively simple. Is this cryptocurrency, is this item, is this commodity undervalued, in which case it has an upside, or is this overvalued, in which case it's likely to have a massive downside? If it's not overvalued and we got in at a good price, it might be time to exit, and the vice versa is also correct. Technical analysis also yields valuable trading data, but it results in different insights. TA users believe that they can predict future price movements based on the past performance of assets. This is achieved by identifying candlestick patterns and studying essential indicators. A lot of people do that with cryptocurrencies. Personally, I think black swan events completely obliterate any of these technical analyses. In the long run, possibly, but in the short run with cryptos, man, I've seen these things fail more than succeed, unfortunately. Traditional fundamental analysts generally look to businesses' metrics to figure out what they view to be its real value. Indicators used include earnings per share, price to book ratio, etc. Now, I don't think any of that stuff applies to crypto particularly, unless of course the cryptocurrency is tied to a centralized body. An example would be Coinbase. Now, if Coinbase were to come up with their own Coinbase coin, that would be tied directly to Coinbase, the company, which is also a stock in the stock market. Cryptocurrency networks can't really be assessed through the same lens as traditional businesses. If anything, the more decentralized offerings like Bitcoin are closer to commodities. But even with the more centralized cryptocurrencies, such as those issued by organizations like XRP, traditional FA indicators can't tell us much. So we need to turn our attention to different frameworks. By strong, we mean ones that can't easily be gamed. Twitter followers, Telegram Reddit users are probably not good metrics. For example, as it is easy to create fake accounts or buy engagement on social media. Now that's a crucial point. A lot of the FUD that we get now with these cryptos, especially with XRP, is kind of based on social media FUD, Reddit, Twitter, now X, Facebook, whatever, all these Discord groups of people talking about XRP, or this is going to happen, or that is going to happen, or, scams and all sorts of things. News that are mass released by organizations with an agenda, whales with an agenda, people trying to shake the trees to see if the low-hanging fruit falls off. So don't trust social media is basically what this is saying. It is important to note that there is no single measure that can give us a full picture of the network we're assessing. We could look at the number of active addresses on a blockchain and see that it has been sharply increasing, but that doesn't tell us much by itself. For all we know, that could be a standalone actor transferring money back and forth to themselves with new addresses each time. Now that actually happens in Bitcoin with some of the whales. They start to move money around to create FUD. They create multiple wallets. They distribute their tokens across these wallets and then they move them somewhere else. And it just creates, FUD. Sometimes some manipulators would do that also in a positive way to try and create the impression of volume and movement in a token that's not actually doing anything. So an organization with a brand new crypto, for instance, that's not widely adopted can do this sort of thing. So again, while it might be useful to see movement in the data, but it's not always 100%. In a minute, I'm going to show you where we can actually see all of these things, because a lot of these most cryptocurrency ledgers are public and you can just take a look at all these movements and wallet addresses, and you can actually track them as well if you're that interested. And there are actual businesses that actually offer this service to organizations such as the government. In the following sections, we take a look at three categories of FA matrix: on-chain matrix, project matrix, and financial matrix. So on-chain matrix, as discussed earlier, is looking at these candlesticks, these charts, movements, technical analyses. On-chain metrics are those that can be observed by looking at data provided by the blockchain. We could do this ourselves by running a node for the desired network and then exporting the data, but that can be time consuming and expensive, particularly if we are only considering the investments and don't want to waste time or resources on endeavor. A more straightforward solution would be to pull the information from websites, or APIs, specially designed for the purpose of informing investment decisions. For example, CoinMarketCap on-chain analysis of Bitcoin gives us a myriad of information. Additional resources include CoinMatrix data charts, Binance Research project reports. Transaction count is a good measure of activity taking place on a network. By plotting the number for set periods or by using moving averages, we can see how activity changes over time. Note that the matrix should be treated with caution, as with active addresses, that there isn't just one party transferring funds between their own wallets to inflate the on-chain activity. So we already talked about that above. Transaction value, this is slightly probably more important. Not to be confused with the transaction count. The transaction value tells us how much value has been transacted within a period. For instance, if a total of 10 Ethereum transactions worth $50 each were sent on the same day, we would say that the daily transaction volume was $500. Now, for XRP particularly, we know that there has been a huge boost in transaction value and actually quantity as well. So these two values, the count and the value, have gone up significantly for XRP recently. XRP has actually flipped Bitcoin in transaction value very, very recently, in volume as well, which is a huge feat and says a lot about how much people are buying into XRP at the moment. Active addresses. Active addresses are the blockchain addresses that are active in a given period. Approaches to calculating this vary, but a popular method is to count both the sender and the receivers of each transactions over a set period, e.g. days, weeks, or months. Some also examine the number of unique addresses cumulatively, meaning that they track the total over time. Now, we know that the number of addresses of people holding XRP has actually gone up. There's a base number that basically stood firm, the XRP army, and then recently we're seeing a massive boost in the number of addresses as well. Now, this could be the same whales creating multiple addresses, but more likely there are people who are actually buying into XRP as people start to FOMO in. Fees paid, this is more concerning blockchains that are either proof of work or proof of stake. Now, XRP doesn't use proof of work and it doesn't use proof of stake. It uses its own consensus metric, which I'm going to talk about in a minute. So this bit here doesn't apply to XRP. Also, the hash rate doesn't apply to XRP because XRP tokens are pre-mined. They're not mined on the fly like Bitcoin or Litecoin. Okay. Project matrix. White paper is extremely important. Like I said, I like to read the white paper. It gives you a hell of a lot of information about the token. A lot of the questions are answered. There's the information about the plan, the team, etc. These are some of the things to look out for in the white paper. Is the technology open source? Yes, XRP is open source. Is there a use case that aims to cater to? Yes, we know what the clear use case is for XRP. The roadmap. Yes, we have a roadmap for XRP, a lot of which has been passed already, and the supply and distribution scheme, that's also clear. Now, for me, the distribution is a little bit less than perfect, but that's a whole nother video. The team. Now, a lot of cryptos are decentralized and there is no team behind them. There's no known team, or the team is kind of, obviously there are people who are developing on the blockchain, but most of the time, some of these cryptocurrencies have anonymous people behind them. While that's a good thing for decentralization, especially with things like Bitcoin and Doge, I guess, we have a known team and a known company that is associated with XRP, which is why, of course, they could be sued, and which is why they've gone through the court process. We know the CEO, we know the co-founder, etc. So we know who they are. They can be questioned, they can be tested. And because we've got legal clarity now concerning the token's status as a security, it has also tested the company itself. They're still going through the legal system, but this adds credence to XRP, in my opinion. Competitors. Now, competitors, when it comes to competitors, I don't see any competitor really for XRP at the moment. We have tokens that are sort of doing some of the same things that overlap a lot, like XLM, that kind of do similar things, but these aren't competitors because, first of all, XLM is completely decentralized, so there is no competing organization. But in terms of magnitude and volume and capability and liquidity, I don't see anybody competing with XRP. So I don't see anyone who's going to take over XRP's role anytime soon. It could happen, but as we stand now, there isn't any. Tokenomics. Some projects create tokens as a solution looking for a problem. Not to say that the project itself isn't valuable, but its associated token may not be particularly useful in this context. As such, it is important to determine whether the token has real utility Now that's not a problem for XRP. When we have the bull runs, especially, a lot of these tokens start popping out of thin air, solutions looking for a problem. And what usually happens is a lot of them end up being rug pulls, absolute failures, or completely crash and disappear in the bear market. In a way, this is why we need the bear market to sort of shake out all the garbage and only the good ones survive. Some of the good ones even die, and one or two of the garbage might even survive if they've got enough believers. But more likely than not, when you have a token that is a solution looking for a problem, the problem usually goes away or never shows up at all, making it completely redundant and useless. Now with XRP, we don't have that problem because we know the clear problem it's going to solve or is already solving in some cases. Another important factor to consider on this front is how the funds were initially distributed. Was it via an ICO or IEO? Or could users earn it by mining? In the case of the former, the white paper should outline how much is kept by the founders and team. We know that. And how much will be available for investors. We know that too. In the case of the latter, we could look to evidence of the assets creators pre-mining, mining on the network before it's announced. Focusing on the distribution might give us an idea of any risk that exists. For instance, if the vast majority of the supply was owned by only a few parties, we might reach the conclusion that it is a risky investment, as those parties could eventually manipulate the market. Now, like I said before, I still do believe that Ripple Labs holds a large amount of XRP, which is slightly a risk, but they've proven over the years that there is a reason for that. And, they're basically going to be providing liquidity to massive organizations, etc. And so far, they've put their money where their mouth is. They've gone through this lawsuit. Any organization could have just basically capitulated and sold and gotten out and rug pulled everybody. But, they sort of making themselves to be up to the task, right? Market capitalization. Now, in terms of market cap, XRP is number 4 at the moment. So we know that that's a thing. Liquidity and volume. Again, XRP has some of the largest liquidity and volume of any cryptocurrencies. Presently topping the charts in terms of volume. Supply mechanisms. To some, the supply mechanism of a coin or token are some of the most interesting properties from an investment standpoint. Indeed, models like the stock to flow ratio are growing in popularity among Bitcoin proponents. If you know the creator Plan B, he's big on this one. I'm not very sure if this has anything to do with XRP. Again, if the fundamentals of Bitcoin are good, that's also good for XRP. So I'm going to leave a link to this resource in the description. It's a lot longer than I would like to go through, but I think I covered the key aspects that are interesting to us. And then it goes into the detail about stock to flow and some of the other technical analysis stuff. I'll leave a link to this resource in the description if you're interested. I think some of this is out of the scope of this video. So I wanted to show you this. This is called XRP Scan. It is an XRP Ledger Explorer. And when people talk about number of accounts created, number of wallets, yada, 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 where are they getting the information? The information is public. You can go to this. There are other explorers as well, but this is a really good one. And it gives you all of the information you need. Your level of knowledge is going to determine how useful this is to you from beginner to expert. Do you work for a bank or cryptocurrency exchange? It's easy to integrate XRP Scan into your app workflow. Read the guide. So this can also be integrated into your actual workflow if you're an establishment trader. But if you're just someone like me who just understands some of this stuff and want to have a quick look at some information like the transactions, the volumes, etc., this is a fire hose of information, right? So if you just go up here, for instance, look at this little tab here: payments, accounts created, accounts deleted, currency exchanges. This is for today, the 25th of July, 2023. You can see accounts created 629. That will grow as the day progresses. Look, these are the validators. You can click on each one of them. It gives you information about them. This is their domain. Okay, they can share with you what it is that they're doing. Okay, and that's for every single validator. These are actual validators, and those websites are different for each one because these are all different individuals or entities, right? And each one of them might choose what information they share with you or don't share with you, but you can see what they're doing, what they're up to. Okay, you can click on individual transactions and actually break them down further. You can find out where they're from, where they're going, what fees are paid, dates, etc. Yeah, look at this. All of the information you need. So everything is public. Everything is there for you to research. There's almost no excuse. If you're going to invest your money into a cryptocurrency, then it's up to you to learn about the cryptocurrency and your investment, so that when you see FUD on the internet, when you see people telling you that something is going to zero, but you know that the fundamentals are strong, you can see what the activities are happening on the chain, then you're not perturbed by someone, leaving a link on Reddit or on X, as it's called now, saying that, oh, this is going to crash, etc. Or when you see people sell off because of an FOMC meeting, or you see people, being fearful because they've been liquidated because they put a 100x trade on, then your trade is a dollar cost average spot position. That's not going to affect you. If anything, if they get liquidated and the price drops, that's another buying opportunity for you. Right, I'm going to stop it here because this video is in danger of getting really, really long. This is not financial advice. I hope you've got some value from it. Just do your own research and enjoy your XRP. Take care of yourself. Peace.